All right, everybody. Welcome to the Option Pit Ticker Highlight Show. Reminder, we're here every Monday, unless Monday's closed, then we're here on Tuesday, breaking down one ticker and how we would play it. We break it down in three ways. We break down the charts. We break down the fundamentals of the stock, and we look at the volatility, and then we develop a trade around it. Always a good time. So let's dig in. We're going to start with the charts. Obviously, we're going to use our Queen of the Candles, the Duchess of Doge, one Leisha J. Leslie, and she is going to walk us through what she sees in the charts of Amazon.
Amazon is currently hitting the resistance of the previous high, just back here the week before last. So to take its next leg above here, you want to see a close over 176. Now, Andrew, we talked about this morning. You want to see, I should have specified, you want to see a close over 176. Remember, a close is always the most important thing, not intraday. Intraday, you'll get a spike and it may trade over it. It could trade 178. You want to see the close over it. You want to see the candle, the real body of the candle.
Okay.
Close beyond that support or resistance. So right now we're just flirting with the previous high, which is our resistance. This rising window here I wrote about will be support. There'll be support for this whole area right here. So basically 170, what is it? 171, 172 to 170. That whole area in there will be support. And then the support from this whole gap comes in 167.70. We break below there, though, we have some room to trade lower.
So
on the upside, we're pretty wide open to trade. I'd say 188.
Okay, so we could be looking at like upside calls 175 to 180 Amazon.
Well, you want to see a close above 176, so maybe you could go out a little further if you want to save some money.
I hope you're armed today. You know what? I closed my arm flies last week, Hogan. I made like 60 or 70 bucks a fly and just closed them. Wasn't at the strike yet, so.
On the weekly, Amazon looks to be bull flagging. That's what I have, Andrew.
Okay.
All right. Well, let's take a look at the underbelly here.
If you closed this morning in ARM, you did well. I was pretty happy making some money back on it. It just didn't look like I was going to get any lift on it.
So let's talk about Amazon and their business model. It's time for them to mature, is my take. The company has AWS, which is its cash cow. It has all these businesses that if it decided to make money, it could make money in. Problem is they keep trying to expand into new things, and every time they expand into new business, they lose AWS customers. You know, I believe it was the Microsoft CEO that said every time Amazon enters a new business, Azure gets a whole new bunch of companies. For instance, Walmart does not allow any of their suppliers that they can push around. So I don't know if they're going to P&G and demanding this, but any of their suppliers they can push around. They demand them off of AWS. You know, we see this within, businesses they enter all the time. And, you know, they've got a $1.76 trillion market cap, 1.8 now $1 trillion market cap, still have a PE of 60. And the reason being is they allow that PE, they allow those earnings to be depressed by trying to break into new business. Now, do I believe Amazon should be investing in AI and improving the way they deliver sales? And, you know, an idea like buying Vizio that Walmart did, is that a good idea? Yeah, I do. I do think those are smart. But it's time for them to focus long term, because I think they're at a point where it's time for them to mature, make money, start paying dividends. I don't know that there's another $1 trillion in here. It's joining the Dow, which is a big deal. But let's think about what happens to companies when they join the Dow. Generally speaking, as you enter into the Dow, you go up, and then once in the Dow, your stock does nothing for an extended period of time. If anything, it falls. So what we have is, I believe, a good company that makes way more than they allude. All right. And maybe it is a little bit spread thin in their focus. They've got 1.5 million employees. Now, a lot of those employees are in the supply and in delivering and in warehousing and things like that. But my guess is that this company could make a lot more money and do a lot better if the tech side of their employees were more focused. Someone is commenting, Amazon should buy Peloton. Why buy Peloton when you can wait for them to go bankrupt and buy it in receivership? That would be my answer there. All right. But there is synergy there, right, on Amazon owning Peloton, because Amazon can deliver they can deliver, handle the supply chain and distribution issues, repair stuff that Peloton kind of loses money on. So there are businesses that Amazon could buy into and enter into, but do I think that they could, if they were more focused on their core industries, they'd be way ahead in the AI game? Yeah, I do. All right. So fundamentally, they're not going anywhere. Do I think they should be doing? Do I think they should be worth 4 Walmarts? Probably not. Probably not. But the question is Walmart underpriced or is Amazon overpriced?
Walmart, Mark?
What?
Is Amazon worth 3 times Walmart?
4. Almost 4.
Wow.
So there is that piece where you have to ask yourself on the value proposition. You also have Target. Target has failed so miserably on the subscription model that has been a huge success for Walmart and Amazon. Target has failed on a Walmart plus Amazon plus type of deal. And, it makes it more interesting. Someone is commenting, maybe Amazon should be broken up. There are arguments around that. Amazon is not a monopoly, though. AWS has competition. Azure, Google, Apple, they all have the ability. They all compete. And frankly, Microsoft on the cloud business, there's a reason why Microsoft has blown up the last year. It's because Amazon is allowing them to. Microsoft's ability to pick up cloud has basically been facilitated by Amazon's aggressiveness in other businesses, not realizing that the barriers to entry into the AWS sphere are not as high as they think. All right, now so what do I think? I think in the next couple of weeks, Amazon's going up. It's entering the Dow. Once it enters the Dow, I think that takes the shine off, and you're going to see Amazon pull back. And that is what I see. I can check.
Today, isn't it today?
Let's see. It's today, February 26th. Yeah, it's today.
Yeah.
So it might actually be, we might actually want to set up a strength. What I would look to do, Andrew, is I almost want to have a short lean strangle.
Okay.
because Amazon's going to be up. It's going to enter the Dow today, so that'll be at the bell, and then it'll be trading within it tomorrow. It'll be up tomorrow, and then probably down for several days in a row. So that would be my interpretation. That's what I see. Andrew, what are you seeing in the implied volatility?
Well, funny you should ask Mr. Sebastian. Then you say, Andrew, what are you seeing in the implied? Because you're like, it's not. That didn't sound near as funny as I thought it would. So it was not very funny. Anyway, I'm in my own personal world here. So let's take a look. Amazon, though, if you look at it, pretty much straight up since April. Like, this is a huge amount of value that came back into this thing. Pretty amazing, actually, I think. 2 years, got down $85. It's approaching all-time highs again. Volatility after dipping pretty low. I should stick to singing. Thank you. So I think, again, you're down here in the sort of lower end of the volatility range. Stock, all-time high again. So Mark's idea of saying, okay, well, let's see, the bloom comes off the rose. We have maybe I thought more of a short-term long and a long-term short type of idea. We get a couple lifts here, maybe pick up some cheap calls. Like, these options are super cheap. I would look at something farther out. Alicia was looking at, wow, we could break up. So if they really like it and add it, and kind of look for a whole new level here, we could have a little action. But here, look at these vol numbers. They're all this. So this is a 90-day vol. I kind of wanted some kind of dumb put, what's a 165 put in June cost? That's $6. I mean, they're still, I mean, they're not nothing. So this is all earnings. So the April 160, so that's better. 160, the 65s are 259. Very, very inexpensive. Calendar diagonal. You could maybe set that up into a move, William. I don't know. You're just the way I look at it, you're just not here. I'll show you a couple things. 10-day vol is 29, 20-day vol is 36, 30-day vol is 30. I don't see a lot of value by selling these options in the short term. Right? Because here, if you look at kind of all your realized vols, the stock is kind of still, even the earnings thing was one thing, but we're still exhibiting quite a bit of movement overall. I think the stock's moving around basically. So if you look at just some of these shorter term numbers, I don't think 25 volatility is a very good sale for options here. I think you calendarize on a move maybe if you get a little bit of a pop. So I think we could do something I would say the March 80 calls and the April 175 puts. So if I go March 80 calls, they're $2.36. Easy to calendarize on a move. And then the April 165s are 256. So the delta here would be 24 long, and the March 15 80s are 36. So if Mark wants us to be a little shorter, what I would do if we're doing the 80 call here, and then April, we could scooch it up to I don't know, I would still stick with the 175s. I asked a couple of questions on the screen. J&J, is that, where did the J&J come from, Maricruz? I don't know. So anyway, so from a trade point of view, I would look at like a shorter term, buy this cheap vol in the back, buy a call in the front. If we get any kind of lift, again, the market's going up. I'm not trying to make this too hard, but sell a call into a lift in Amazon. Because it looks like we're not very far. If we get that little breakout that Leisha was looking for now, or we just do this again and we go right back down to 165. So that's kind of how I would do this. And basically, you're looking to see, okay, you know, through the week, what kind of a move do we get out of this bad boy? So it would be, so I would say again, the March 165 put at a 24 delta long vol part. You know, we could make it cheaper, the 82 and a halves. I'm $7. I don't know if I want to be that far out of the money though. Like I would almost, I don't think the 180s for 230-ish are bad. So let's see here how I would set that up. So I would buy one Amazon March 15. Again, this is just to capitalize on the short-term market rallying. That's all. 180 call for around 230. And then I would buy one Amazon April 19, 165 put for around 230. See if we get the prices correct.
Yeah, interesting play.
There's a question there from Maricruz, Mark. For
Yeah, I saw. I'll address it when we're done here.
All right. So the 180 call here. You want to lean a little shorter though, I think, right?
Yeah, I mean, I kind of like the 180 call. I kind of would be looking at.
You want a little more aggressive put, like the 170 put. Like this vol here is nothing.
That's like $4. That's not bad. I would do that.
Okay. All right. So
and if you're looking for just a straight play, buy the 170 put.
Okay.
We're gonna skip the call.
We're gonna add a little. So I figure we get a little action this week. If the market rally continues, you sell the call for something, and then we can work it out that way. And let me give this to Christian here. So this is buy to open. Okay. And so this is we got a little market action, Dow excitement, dump our call. Maybe we get 60, 70, 80 cents out of it. And then try to ride the put for the inevitable sadness lower.
And if you want to go simple, just buy the April put.
Okay, yeah, and stop it for like $3.50. That's the easiest way.
Like I'd stop it out at 3, and then let it see if you can get $6.50 out of it. So we're risking 1 to make 2.5. That I'm okay with.
Okay.
And that, my friends, is our approach to Amazon.
Yeah. I don't think we had a Johnson & Johnson trade.
No, we don't.
Oh, okay.
All right. So, folks, that was our take on Amazon. If you are a member of Option Pit, you are seeing the trade alert in the app. If you are not, why not? Come and join us. Give my team a call, 888-872-3301, and ask how you can join. Ask which one of our services is right for you. We'd love to have you on board.
Have a good day, everybody.
For Alicia J. Leslie and Andrew T. Giovinazzi, I'm Mark Sebastian. Your only option, and I hope you have a great day.